In today's video, I'm going to give you my personal, simple, but effective way of trading support and resistance. Now, this way of trading might increase the chances of you being in more profitable trades. And the big one, you don't have to trade each and every day to achieve these type of results. I am going to help you achieve simple success and efficiency in your trading. Right now, let's list the benefits of trading support and resistance. Number one, you get a good probability of market direction over a series of trades. And since you have a good probability of market direction, it leads to number two, high win rate. And with a high win rate using the support and resistance strategy, you are likely to get smaller losses and significant profit gains, which means number three, you have smaller stop loss distances and potentially large take profit distances. Now, if you are new to our channel, remember to subscribe for first class trading future content. Benefits outlined. Let's now show you how to draw support and resistance. And there's a mistake most traders make while drawing support and resistance. You want to find that out because we are going to help you overcome that. Moreover, we are going to help you use support and resistance with market trend. You don't want to mess out on this, I tell you. Number two, we are going to show you which time frames are best suited for support and resistance. Because the truth is, it works okay, just fine on all time frames, but these specific time frames, it works phenomenally best, and we will show you that. Now, finally, number three, stick around till the end because we are going to give you a secret stop loss technique that gives you quicker take profits, meaning that you don't have to stay long in trades till they hit take profit. We are going to show you that.
Now let me properly show you how to properly draw support and resistance. What you want is to identify areas where the market has aggressively moved up for a support. Let this green level indicate a support level, right? What you want is to identify areas where the market has aggressively went up twice and back to the same level, right? Up once, up again twice and back to the same level. Now once the market has confirmed to this criteria, what you want to do is draw a line that touches the first time the market went up and the second time, therefore creating a support level. Now let's show you real-time data. These arrows right here say this is the data we're going to be focusing on. Now what did we say up there? We said that we want to identify areas where the market has aggressively impulsed twice, and I said recent data. You don't want to be looking left or zooming out of the chart trying to find out what the market did in 1905. No, I'm speaking about today's data, and that's the technique you want to take advantage of. Now data, I mean today, what you see on the screen. So the market aggressively impulsed up from there, as you can see, to the upside, and the market aggressively impulsed again to the upside, meaning that this is a very good support, right? We said we wanted to touch what, how many times? 2 times, and the market has aggressively went up twice. Now let's see what happens on the third time. You see that the market touches this area again with the time, and what's the result? The market moves up, you see? So that is how we properly draw support and resistance. If you want to be doing this mistake of looking to the past and seeing, oh, here's this, you're gonna miss up on current opportunities right now. You will miss up on current opportunities. What we suggest is that you go ahead and look for recent price movement. If you are trading on a Monday, you want to look at Friday and Thursday's data. Where did the market aggressively, I mean it impulsively, in a quick succession, like a moving fast train, where did it strike up once, strike up twice. As soon as you have two areas which have consistently, which the market has consistently moved up from, that's where you want to start drawing your support and resistance. And let's look at what happened at that time the market comes to touch this level. It keeps on moving up. Now let's go to how to identify resistance. I want to suggest to you guys, you let this red line represent resistance, right? Now with resistance, it's a similar thing. You want to look at the recent, and that's the trick to all this, the recent data, whether market has aggressively moved to the downside and come back near or within the area and aggressively move to the downside again. Once you have two touches of the same area, you want to draw a red line or a red box signifying a resistance level. It means this is an area where no one was willing to buy, but they were past this point. If there were many buyers, then the market would have carried on up. It means that there were more sellers than buyers and the market therefore moved down. More sellers than buyers, therefore the market moved down. And we know if people made money here, think of it this way: if you're a trader who sold here and made money, aren't you likely to sell here again for the mere fact that you made money there? And if you sell and you make money, aren't you likely to come back and sell again? That's what support and resistance is, a probability of where people bought and sold. Now as soon as you have an area where the market aggressively moved down twice, that means that there was a lot of sellers. You want to draw a resistance and wait for that touch. Now back to chart data right now. What did we say we want in identifying a very strong resistance structure? We want areas which the market has aggressively moved down, and we want to see if the market will come back there and test this area. And we see that the market does indeed come back here for a second touch and aggressively moves down to the downside. Now this means that this is a strong support after this second time move to the downside. What we want is to wait for the market to come back there again, and we see that the market does come back and aggressively moves down, and does come back and aggressively moves down. And that basically explains how to properly draw support and resistance. Remember, if you make this mistake of looking at past data and saying, hey, this is where the market went in the past, you're gonna miss out on today's data. Imagine if you drew that as a support from the past. You're gonna miss out on today's buy movement, today's sell movement. Now that is how we suggest you properly draw support and resistance. I am about to show you something that is important to accompany support and resistance drawing identification together with trend movement. What this means is that we are now going to show you something that's important about trend movement that will help you trade less but gain more.
So this is a brief explanation of what trend is. If you don't know, this is your time to know. Now imagine the market moving up and then moving down and then creating a higher movement up. What we call this is a market that's potentially forming an uptrend. So in this case, we have an area where the market made its highest point and its low point, and a new highest point, making this a new high, and its lowest point, making this a higher low. Why is this a higher low? It's because of this low is lower than that low right there. Therefore, we call it a higher low. So what does the market do? It again impulses and creates a new high, and this new high is referred as a higher low. And again, we make a new low referred as a higher low because of it's higher than the previous low. And in this case, we have what we call a proper uptrend market. Now the same goes for a market that's bearish. You will have a market moving down, making a low and a lower and a point right there, and as soon as it makes a new low, what this point is called is a lower high, because this is the highest point in the recent time, but it's still lower than this point.
and this is the lowest point in the recent time, but it's lower than that point. So this is now referred to as a lower low, meaning that it's lower than the previous low. This is a lower high, meaning that it's lower than the previous high. So in this case, we have a bearish move. Now we are going to show you why it is beneficial to use trend movement to help you trade less and also be on the right side of the market. Now let's suppose this was the recent time data, right? We want to identify trend in this date. We noticed that the market made a little high right there, still lower than that high, meaning that there is a lower high and a new high low. Why is this a high low? Remember, it's higher than this low, so that's a high low, new high, higher low. Why? It's because of it's higher than that low right there, and then higher high, higher low, higher high, higher low, higher high. Now higher high, higher low, higher high. Now in this case, we made a new higher low, but a lower high and a new low. This signifying that there is a potential change in trend. Now, what is best you use the strategy with? I suggest that you use it together with trend, because of if your market is bearish like it was, like bullish like it was from here, if the market is bullish like it was from here, let's see where does the market start being bullish. New high, high low, new high. Now the market starts being bullish from this point on, right? Meaning that above this point we started being bullish. Now we want to look for areas where the market has impulsively bought at least once or twice. Now let's switch this back into candlesticks. Now as soon as we switch it back into candlesticks, we want to see if the market does form an area where we can buy at least twice, So does the market do that? No. The market keeps on going up, right? And here's why it's important to trade with support and resistance. If you weren't following trend, you would have had a resistance point here. You know why? Because of the market did touch this area once, twice, 3 times. Now you would have been anticipating to sell at this point and knowing very well that when trend isn't in your favor, you don't want to be trading against trend. Now the market closed above that level. It did sell, but you were likely to have been stopped out and the market did continue down, right? So those are the reasons why we suggest that you use this together with trend. And how are you going to use it in trend? This way, you want to wait for the market to show you a clear intent of trend. In this case, we're making new highs and higher lows, new highs and higher lows, new highs. As soon as you have this, you want to look at the most area which is a result of an impulse. Let's just choose this level because of the market impulse from here. We see that we have another touch, second touch, at that touch confirming that this is a strong support, and watch the market does. That's just how we suggest that you use this together with trend. Now, to have a resistance point, yes, we do have a resistance right there. And if you were just using it alone without trend, you would have been looking for some movements here and look at what the market does. It goes through past that point. So not all strategies work together with trend, but in this case, we highly recommend that you use it in conjunction with trend. And on to the second part of how we suggest you also use the strategy. Now, we want you to focus on your M15 time frame. Why the M15 time frame? Because of the M15 has a combination of both the higher time frame and the lower time frame movements. Now, if you want to use the daily chart, it's going to take you longer to stay in positions, and it's going to also be much more
slower in movement. Now you want a combination of high volatility movement, quick in and out in your trades, and also a combination of the daily information and what you get from the D1 or your daily chart. Now here's where we suggest that you use it with the M15, because the M15 combines both the minute chart data and the daily chart data and the hourly chart data to bring it at a perfect standstill. We have found that it works best on support and resistance works best on the M15. Do you want to use the M15 alone? No, you want to go on your daily and you want to find out that the trend is on daily, and you want to go on the H4 as well, and you want to pinpoint areas where the market has recently impulsed. Remember, if we are bullish on the daily, what you want to do is you want to go on the H4, right? Highlight potential areas where the market has impulsed from. Highlight these levels like that. And as soon as you have highlighted these levels, you want to go on your M15 and you want to wait for the market on the M15 to react on these H4 levels. And if on the market, on the M15 market, you do get some small movements where the market does something like this, then in this case you want to draw your support here. This will be the second support, because of the market might move, right? Why is this necessary? On your H4 levels, the market might move up and it might never come back here, and it might form new support and resistance levels, and you may be able to identify these on the M15, and that's why we suggest that you draw support and resistance. And to sum this all up, now you know how to identify trend and you know how to use it together with this strategy. Remember what we said, trend is a series of new highs and higher lows. And what does trading or trend do for you? First and foremost, you trade less, and if you trade less, it means that there is more potential for you to make in profits. If you're trading 5 times a day, you are open to risk 5 times, but if the trading strategy you're trading has a good average of 2 to 3 trades a day, then you're open to risk less times than you are with a trading strategy that says, hey, let's trade 5 times. So we have that. It will help you trade less. And also, when you use the M15, when you take the daily information and the H4 information and you wait for that information to be triggered, meaning you wait for support and resistance to be triggered on your M15, you're going to end up with having a lot of data from the higher time frames, but still being able to execute on a lower time frame. So we are going to show you how to best draw a stop loss level, meaning that the best area to place your stop loss, when taking a buy or sell trade. Let's suppose this was an area where you were supposed to buy from, right? Now, focus, guys. This is very important, because of it's gonna get you out of trades, take profit quicker than the usual trader. And you want that the quicker you get out of the trade and profit, the better. It means that you have the whole day to rest and sleep or play games or whatever you want. Now let's suppose you bought right here, right? And here's where we suggest you put your stop loss. It's simple, just below your entry candlestick, just below. What this does, notice when the let's suggest that. Notice when notice what happens here. Initially, when we had placed this was a 1:1 trade, but as soon as your stop loss is below your entry candlestick, really below, you must make sure it's actually below. Let's come on, let's try and adjust this. when it's really below your entry candlestick, right? This makes the trade 2 times quicker and to take profit. Remember, it was a 1:1, and we didn't even adjust our take profit. All we did was have a shorter stop loss below the candlestick in which you entered it, and this automatically gave us a quicker chance into your 1:2 reward. Now this grew by 1% profit, and you didn't have to even adjust your take profit. Now if you wanted a 1:3, you'd be still out of 1:3. Unlike if your stop loss is way beyond, oh, look for a level in the past where the market is what, and then you put your stop loss below that level, you're gonna stay in that trade quicker. And you know what? There's a high probability. If you want a 1:3, now look at how long you have to wait for it. Look at how long you have to wait for it. And let's see. Again, we made a mistake right there. Let's see. Does the market end up going into your 1:3? Yes. But look at how long it took. Look at how long it took versus this way of trading, just below, and it only takes you a couple of minutes. Now you choose what is it you want, and there you have it, guys. We just simplified the way of trading support and resistance, the best way for beginners. And even if you're an advanced trader, this is going to help you. And let us know what is it you guys suggest we do and improve, and what would you like to see. Would you like us to make a video of us showing you how to properly draw support, how to properly draw trend lines, and how to use them in today's market? If you want that, let us know. Let us know what you think, guys. And we want to give you something else. We want to give you a Telegram group where you don't have to take signals, but you can just see us taking these trades, in which we teach using this trading strategy. We teach on live positions. And if you want that, let us know in the comment section. Let us know if you want to see us make a Telegram group where we'll be showing you guys the before and afters of the trades we take each and every day. Win or loss, we will show them all, and we'll show the lessons. Now that'll be all from us. We thank you for tuning in. Remember, be a giver. Be a giver. Be a successful person. A successful person give this video to one of your friends, to one of your trading buddies, to the internet. Be a giver to them. Be a blessing to somebody with this video, and make sure to hit like and subscribe. And let us know what is it you want us to do, and we'll be there to do it for you guys. Till we meet again, thanks guys for tuning in. This is First Loss Institution, and we are here to make the hardest concepts of trading simplified and easy to understand. Till we meet again, guys. God bless. Cheers. As a word, let's thank our sponsors, More Gifts. Not only are they great sponsors, but they provide very, very fresh and nice biscuits, and also affordable. You know, you can use these while you're trading to have a snack, and you can mix them with whether you want a snack or start them off as your breakfast. You know, More Gifts, it's your brand. Try them out. Let us know what you think. To meet again. Cheers.